Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 8th of August, 2020, and we're publishing our gold and silver weekly update for the week ending the 7th of August. Gold rose $60 last week, from $1,975 to $2,035, having hit a high of $2,075 and a low of $1,961, a rise of 3%, following the previous week's rise of 4%. In sterling terms, gold finished the week at £1,560. That's up £50, or 3.3%. And in euros, it closed at €1,726. That's up €47, or 2.8%. Silver rose $3.92, from $24.41 to $28.33, having hit a high of $29.88 and a low of $24.07, a rise of 16%, following last week's rise of 7% and the week before that of 17%. So it has been on a tear. In sterling terms, it closed at £21.71. That's up £3.05, or 16.3%. And in euros, it closed at 24.04 euros. That's up 3.30 euros, or 15.9%. So all around the 16%. The gold to silver ratio fell this week again, from 80.9 to 1 to 71.8 to 1. Interestingly, Bitcoin remained pretty steady, and by the end of the week stood at $11,701. The Dow Jones closed on Friday at 27,433, up 46 points on the day and up 1,005 points on the week. The S&P 500 closed at 3,351, up 2 points on the day and up 80 points on the week. And the Nasdaq closed at 11,010, down 97 points on the day and up 265 points on the week. Brent crude closed at $44.40, up 88 cents, and WTI crude closed at $41.22, and that's up 95 cents on the week. The dollar index stands at 93.43, up just 0.13 points on the week, having been considerably lower earlier in the week. Well, yet again, another exciting week both for gold and silver, with gold ploughing through the $2,000 level, a strong psychological resistance level, and silver making mincemeat of the $27 high resistance level that most technical analysts believed would hold. There was a pullback on Friday of both metals, one in which we calculated should have occurred, frankly, on Thursday, save that Thursday saw an unprecedented rise, seeing gold reach its highest level ever, and silver its highest for almost 8 years. All of this while equity markets also remained not just firm, but in positive territory, and they themselves within around 10% or so of their all-time highs. Now, economic data last week was mixed, but broadly positive, with the all-important job data showing an improving position, but suggesting a slowdown in the rate of improvement. Motor vehicle sales, though, were considerably higher in July compared with June. Now, we covered some of the economic data and what it meant in earlier videos during the week, the two most notable being Thursday's gold hits all-time high again and silver touches $29, and yesterday's much shorter video entitled Gold and Silver Fall Back, Brief Update. And we've placed links to both of these in the description box below. Now, tomorrow we're going to produce a more in-depth video specifically on silver, and so we shall make ours today a little shorter than usual. Needless to say, both gold and silver benefited considerably from the weaker dollar, which then strengthened again on Friday because of the positive non-farm payrolls. As far as gold is concerned, the technicals suggest that a reversal pattern occurred on Friday, with support at the 10-day moving average of $1,992, that's $1,992, and both short-term and medium-term momentum turning negative, and the fast stochastic suggesting a sell signal. Overall, though, the likelihood is a short period of consolidation. Now, as we mentioned last week, quote, if we were advising day traders, which we're not, we would suggest to let the profits ride higher, but protect the downside just in case, unquote. That seems to have been quite good. I won't use the word advice. Silver has to some extent gone parabolic and has $30 in its sights, no doubt, which is seen as really the next major resistance level. Many analysts are quoting that silver would be a worthwhile purchase should it manage to fall back between $26 all the way down to potentially $24, and between there a serious number of support levels. As quite a few believe that silver could now actually reach its all-time highs within the next 12 months, if not sooner. So let's take a look at the economic data that could influence prices next week. Monday, we have job openings for June. Tuesday, the NFIB Small Business Index and the Producer Price Index for July. Wednesday, we have the Consumer Price Index for July, Core CPI, and the federal budget, all for July. Thursday, the Import Price Index for July and the weekly jobless claims. And then on Friday, we have both retail sales and industrial production for July, productivity for quarter 2, and the Consumer Sentiment Index for August. So most of the interesting and impactful data appearing Wednesday through Friday. Now, we mentioned in yesterday's video a range of non-data activities which could also have a bearing on prices this coming week, mainly political or geopolitical. President Trump has issued an executive order against TikTok, which has threatened retaliation via legal action, and the US Treasury has imposed sanctions on Hong Kong's chief executive, Carrie Lam, and 10 other top officials from Hong Kong and mainland China. Clearly, this is going to result in some form of political reprisals, if not any type of action. Facebook yesterday removed QAnon conspiracy group with 200,000 members following Twitter's and TikTok's move last month, which will set up, once again, at some activity against liberty and free speech. And there are now over 19 million, in fact over 19.5 million now, coronavirus cases worldwide, and in excess of 720,000 deaths, of which 163 to 64,000 occurred in the United States, which, as we mentioned yesterday, seems to have a minimum of 1,000 deaths a day. And in fact, yesterday, 1,290 were quoted. Now, there is no doubt that dollar weakness was one of the main beneficiaries for gold and silver this past month, as equity markets themselves have held pretty firm so far. The level of stimulus and the promise of even more by both central banks and governments around the world have at last convinced investors that buying gold and silver is the sensible investment opportunity because of currency devaluation short term and potential inflation longer term. Now, what can we expect this coming week? Well, as far as gold is concerned, we expect a slight respite and consolidation, at least until Wednesday, and then the data may take over. And silver similarly, though we shall cover more about silver tomorrow, as it does now have the potential to continue its breakaway from gold, and we shall cover the reasons why. Now, finally, we wish to end this update on a note. Over the past 3 to 4 weeks, we've removed over 23 people from our channel. This is probably as many as we've removed ever since the channel existed. You see, as gold and silver passed our forecast for the year, which admittedly was set back in February, long before the coronavirus was seen as particularly significant, and while the economy was still roaring ahead, a number of new members joined, and lurking members suddenly appeared with comments like, "The pumpers were right, after all you were wrong, you don't know what you're talking about," etc., etc. Now, this simply proves our point that we have been targeted by those channels and individuals who have had a vested interest in seeing gold and silver prices going to the moon, rather than legitimately expressing their genuine views as to where prices should rest on a week-to-week, month-to-month, or year-to-year basis. But we wish, therefore, to remind those listeners, who hopefully are objective, of some rather pertinent facts. Since this channel began, we've predicted with some significant accuracy where gold and silver prices would end up week-to-week, month-to-month, and year-to-year, perhaps being out generally no more than 10%. This against a backdrop of pumpers telling you in each year from 2015 onwards, and frankly before that too, that gold was going to $5,000, $10,000 and even $15,000 an ounce, and silver was going to skyrocket through $50 and touch $100 and then as high as $600 in each of those consecutive years. In other words, by the end of this year, gold will be $5,000, silver will be $100. And then the following year, gold will be $5,000 to $10,000 and silver $100 to $200. And then the following year, and it moved on and on and on. And each time we stated, no, it's not going higher than 22, 23, and in some cases 17, 18, and we were broadly within 10% right. Now this year, with a global pandemic, a president and frankly other world leaders who've handled the pandemic in our view appallingly, but it's easier to say that with hindsight, and central banks stating that they will do all that they must to save the global economy, our predictions given back in February will be out by a greater margin than our traditional 10%. We accept that. However, we shall still say confidently that our inaccuracy, if you wish to use that term, will be by no means as large a margin as high as those predicting the gold and silver prices we mentioned earlier. Let's wait and see. Time will tell. In addition, we also announced earlier in the year, and we shall check back, but I'm pretty confident we said this also in late 2019, that the 2020s will be the decade for precious metal prices, and that we would see all-time highs being beaten, albeit admittedly, we saw this happening closer towards the end of 21 to 22 and then moving into 23, perhaps in 23 being the peak, than in 2020. So please be mindful, if you're a troll, we'll just remove you. And if you're one of those pumper supporters who perhaps are chomping at the bit to have a told you so comment, then we ask you firstly to consider what your predictions were a little over 6 months ago, and a year ago, and 2 years ago, and 3 years ago, and still compare our record against those. Always remember, even a stopped clock is right twice a day. In their cases, the pumpers' cases, and we're still not totally confident they'll be right yet, it has been some 9 years when highs have been reached. And if you had bought back those 9 years ago, when they were still telling you gold is rising to 5,000 and so forth, you would still be underwater today with silver, even at its recent splurge into 8-year high territory, and you're just getting your monies back with gold. Just bear that in mind. Of course, if you purchased 2015 onwards, then you would be making a profit in both. Also, we wish to point out to other critics, and we've noticed some, I'm a bit concerned because some of them have been with us a while, who've said, you've been bearish on silver. Not this year we haven't. In fact, we've always stated, if you're light in silver and gold, then you should top up slowly and gradually and hold and buy for the long term in view. That's not being bearish. We were cautiously warning that there was no need to panic in 2015, 16, 17, 18 and 19 to acquire it, but to do so steadily and benefit then from dollar cost or pound cost or euro cost averaging. Now, we did, however, strongly guide you not to pay the significant physical premium silver prices, which was pushing silver upwards of $25 to $27 an ounce earlier in the year, around March. Particularly when at that time you could have availed yourselves of either ETFs or companies like Bullion Vault, who would store the gold and allow you to purchase it tax-free, where you would have paid less at that stage than $13 an ounce for silver. And you could, if you decided you want to, as some of our members did actually do, sell at 100% profit now, rather than break even if you had ignored us and acquired the physical and paid those premium prices. There was also, for the skeptical, a month's opportunity between then and now where you could have purchased silver as those premiums fell. Admittedly, they would have been closer towards $20, but it could have been purchased at that time. I think the lowest was about $19.25 we saw, but that might have just been a special deal. And that happened just before then the sudden spurt in prices. So please, by all means, question what we say. By all means, ask questions about what we say. But please do not try and deceive other viewers by stating that we have said things that we haven't, or we've adopted positions that we haven't. And on that note, we hope we've set the record straight and that you have an enjoyable and safe weekend, and as usual, a prosperous week ahead. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they're published. Not forgetting that we update our Richard and Greg channel every few days, and we have a new video appearing on that one tomorrow as well. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.